What if the difference between being broke and being financially free wasn't your job, wasn't your luck, wasn't even how much money you start with, but just a few decisions repeated over time? Think about it. Every day, people wake up, work hard, earn money, and somehow still feel stuck, while someone else quietly, patiently, almost invisibly builds wealth that lasts generations. No noise, no showing off, no chasing trends, just discipline. And that person is Warren Buffett. He didn't invent anything crazy. He didn't follow hype. He didn't try to get rich fast. In fact, his strategy is so simple, most people ignore it. And that's exactly why most people never get rich. Today, you're about to hear 10 rules, not motivation, not theory, but principles that have quietly created billions. And here's the truth. You won't fail because these rules don't work. You'll fail because they're too simple to take seriously. So don't just listen, think. Because somewhere in these next few minutes, there's one rule that could change everything for you. Rule 1. Never lose money. At first, this sounds impossible. Never lose money? In a world where markets crash, prices drop, and uncertainty is everywhere. But Buffett wasn't talking about perfection. He was talking about respect for money. Most people don't lose money because they're unlucky. They lose money because they're careless. They invest without thinking. They follow trends. They get influenced by hype. One day it's stocks, next day it's crypto, then something else. There's no plan, no understanding, just emotion. And emotion is expensive. Buffett saw this early. He realized something most people ignore. Making money is important, but keeping it is everything. Because loss has a hidden cost. If you lose 50% of your money, you don't just need 50% to recover. You need 100%. That's double the effort just to get back where you started. So instead of chasing big wins, he focused on avoiding big mistakes. He stayed away from things he didn't understand. He ignored hype. He didn't rush. And slowly, that discipline protected his wealth. This rule isn't about fear. It's about control. Before you invest, ask yourself, what could go wrong? And more importantly, am I okay with that risk? Because the fastest way to grow your money is to stop losing it. Rule 2. Invest in what you understand. There's a quiet pressure in the world today. If something is trending, you feel like you should be part of it. Everyone is talking about it. Everyone is making money from it. And suddenly, you feel left behind. So you jump in. Not because you understand it, but because you don't want to miss out. That feeling has a name, fear of missing out. And it's one of the most expensive emotions in investing. Buffett avoided it completely. He followed something simple, circle of competence, which means stay inside what you truly understand. Ignore everything else. Now, this sounds boring, but it's powerful. Because when you understand something, you know how it makes money. You know its risks. You don't panic easily. Most people invest blindly. They buy companies they can't explain. They trust opinions they didn't verify. And when things go wrong, they don't know what to do. So they panic. And panic leads to loss. Buffett chose clarity over excitement. He didn't care if others got rich faster. He cared about being right. And over time, that patience paid off. So next time you see a hot investment, pause and ask, would I still invest if nobody was talking about this? If the answer is no, walk away. Rule 3. Be patient. Patience sounds simple, but in reality,
It's one of the hardest things to practice because patience feels like nothing is happening. You invest, days pass, weeks pass, months pass, and your money barely moves. Meanwhile, you see others making quick gains, fast money, quick flips, instant success, and suddenly doubt creeps in. Am I doing something wrong? That's the moment most people quit. Buffett didn't. He understood something deeply. Wealth is built slowly, then suddenly. He didn't rush results. He didn't check prices every hour. He trusted time. While others chased speed, he chose stability. And here's the uncomfortable truth. The market rewards patience, but tests it first. Most people fail that test because waiting feels boring, and boring feels wrong. But that boring consistency is exactly what builds wealth. So when you feel like nothing is happening, remember, growth is silent, and the longer you stay patient, the louder it becomes. Rule 4. Be fearful when others are greedy. This is where psychology takes over. When markets go up, people feel confident. They buy more. They take bigger risks. Everything feels safe. But that's exactly when danger is highest, because high prices are driven by emotion, not value. Now flip the situation. Markets crash. Prices fall. News becomes negative. People panic. They sell everything. And suddenly, good investments become cheap. That's when Buffett steps in. While others are scared, he becomes curious. He doesn't follow emotion. He follows logic. He understands that fear creates opportunity. But here's the challenge. It's easy to say, hard to do. Because when everyone around you is panicking, staying calm feels unnatural. That's why most people fail here. They do what feels right, not what is right. Buffett trained himself to think differently, not emotionally, but rationally. So next time the market drops, instead of asking, how much am I losing? Ask, what opportunity is this creating? That shift alone could change everything. Rule 5. Pay yourself first. Most people have a pattern. They earn money, they spend it, and whatever's left, they save. If anything is left, and usually nothing is. This pattern feels normal, but it keeps people stuck. Buffett flipped it. He treated saving like a priority, not an option. Before spending on anything, he saved first, even small amounts, because he understood something powerful. It's not about how much you save. It's about the habit of saving. That habit builds discipline, and discipline builds wealth. When you save first, you control your money. You avoid unnecessary spending. You build a future fund. Most people wait to earn more before they start saving, but that day never comes because income increases and so do expenses. So instead of waiting, start small, even $10, because consistency matters more than amount. And over time, that small habit turns into something big. Rule 6. Focus on value, not price. There's a common mistake people make. They see something cheap and assume it's a good deal. But cheap doesn't mean valuable, and expensive doesn't mean overpriced. Buffett looks deeper. He doesn't ask, how cheap is this? He asks, what is this actually worth? Because a bad company at a low price is still a bad investment, and a strong company at a fair price can be a great one. Most people chase discounts. Buffett chases quality. He looks for businesses that have strong fundamentals, make consistent profits, have long-term potential. Because value grows over time, price changes every day. So instead of focusing on price, focus on strength, because in the long run, value always wins. Rule 7. Invest in yourself. This might be the most underrated rule. People spend time searching for the best investment, stocks, real estate, crypto, but they ignore the most powerful one, yourself. Buffett believes your skills, your knowledge, your mindset are your biggest assets, because markets change, trends change, but what you know stays with you. When you invest in yourself, you make better decisions, you increase your earning ability, you reduce risk. It doesn't require huge money, just time and effort. Read, learn, improve, because the more you grow, the more your money grows. Rule 8. Compound interest. This is where things get interesting. Compound interest is simple, but powerful. It means your money earns returns, and those returns earn more.